All right, good evening, peoples. It's Bruce. Let's jump in here to BITO and YBIT. All right, what happened on Friday trading? Well, BITO was down 2.81%, down to 2251, and we were down 4.65. Well, a few things happened, and then I've got something to tell you about BITO that's going to affect some other things. So we had some liquidation in the ETF fund, right? So whenever they get selling, when people buy in and there's a net gain in shares, then typically they add synthetics and they do additional the weekly naked calls. When people sell, they oftentimes, they have money in the treasuries, but they don't want to eat their collateral, if you will, and their interest earning money. So they go and they sell positions they've already sold in synthetics. And in this case, they did that on Friday, and then they sold when they rolled more of the ones that closed out on the weeklies, that they in fact didn't buy as many in for next week. And that's one way of gaining more money that they had to pay out. They paid out 225,000 shares. We went from 2,175,000 to 1950. So that's 225,000 of a loss, almost 10% of the fund, 9.89 of the fund, right, getting sold out. And, you know, BTC is down and looking like it has a small bear flag that could drop down into the 59 and get to 56 at the 200-day moving average. If it breaks that, it could go further to solid support at 50 to 52 range. I hope it doesn't, but that's what I see when I look at the chart. I say 70-30, that it's a breakdown instead of going up, to revisit those levels. I hope I'm wrong. So if anybody says, oh, Bruce, it bounced to 65, you don't know what you're talking about, I'll be very happy. I hope I'm wrong. But I tell you what I see. If it does that, you can say, yeah, I guess you were right. So always be cautious on these things. There's nothing wrong with buying if you see it drop further on those levels, or if you don't have any position, you say, I'll take my chances. I want to move in, right? All right, let's jump into what actually happened besides that. So this was closeout day, right? Closeout and roll. So let's look at all four of these orange trades, and let me distinguish this one that the new one that we did on 628. So we're in a situation where we sold 125 and 10,250, and we got a penny. So we actually, if you look at the transaction, it was for 10,375. These were categorized differently because we sold them for different prices. But when you buy them back, they're all sold at the same. And then we additionally bought back 4,100 and 1320, having one transaction, and we paid 2 cents, whereas we had sold 4,100 for 21 cents, bought them back for 2, sold 1320 for only 12 cents, and bought them back for 2 cents. The final transaction was buying back 1,000 at a nickel that we collected 35 cents for. So this one had been done previously on 626, where we had already closed it out. So that, you know, we gained 99% of what we had sold. So nice job. It's just, it reduced the amount. Normally this would have been 12 or 14,000 instead of 7 putting on the new ones. But since they had to additionally get that money back that was liquidated from the account, they sold some synthetics, right? They didn't put any additional on, and they're not ready to roll because they're all the way out to 8.2. So let's take a look at that kind of activity. Let's go look at the synthetic, and this is the transaction. They closed out 2,100. So when you close it out, you buy the call, you sell the call that you had bought, and then you buy back the put. Now normally this would, sorry, did I do this right? Yeah. So that dropped us, right, to making this we're now at 19 million instead of prior being at 22 million. So we've got less money in our synthetic, and that brought us back from a $23 million loss to only a $20 million loss. Now, the anomaly here, let me show you something on the weekly. Even though this is the actual closing number, I changed it over here, and let me tell you what I mean by that. Because I remember when this first happened to me a month ago, I was like, well, why would they write a call and have a strike price lower than 22.51, the closing price on Friday, 6/28? Well, because they know that BITO during the day announced, okay, a dividend payment of $1.50, 1.501309, right? But bottom line, $1.50. And that's going to come out of the fund when it opens in pre-market on July 1st in the AM. And so I went ahead and showed it here because all next week I'm going to be dealing with it to show you that we really are 4.71 out of the money versus if I type in 2251 here, you're going to see it as being, already in the money. And you don't want it to already be in the money, right? You want some room to run before you have to give back your money, and you have some margin room, but not margin in the sense of margin in an account, meaning distance, right? The distance from the strike. So last week we captured, 99% of all our money. That's positive. We're out 4.71 on the single call. Now, if people buy in when they announced a declaration on 7/3, then the fund is likely to use that money because I still think they're going to give us an 81% yield. And we'll take a look at that. So let's go look at holdings, right? So not everywhere I updated the 2251. It's not relevant, in every single one. I did update this. So here's the new position, and it closed right at the 27 cents we sold it. It just happened to be the same amount. And you can see here in the fund that we've moved, there was a 22.4, a 22.5, a 22.3, and now we dropped to 20.267. You see our close, which is abnormally low compared to this, but here's another dynamic. This $20 million loss is going to be bigger because BITO is going to open in the pre-market at 21, and that makes the gap even further, but it's the close that really matters, and even sometimes the pre-market can make up 30 or 40 cents, and somebody will say, well, it didn't drop $1.50. I go, yes, it did. The very quote would be, the 2101 price. It's just the market itself can take it up and down. When you take the pre-market and the trading, who knows what it does? So the people that think you always buy on ex-dividend, yeah, it starts out taking it out of the NAV and the price of the open, but who knows which way the market's going to go on that day. I mean, it's not a bad strategy, but it's not foolproof. So let's go. So you see this, nothing else changed. Let's go to the payouts because that's where the meat is. So I said the loss on the synthetic, the 35, is down from 22 million, and it's really 20 million. I don't know why that's typed in there, but that's more accurate, from the redemption of the shares. And we have all the way to August 2nd, but we're further going to see, our situation where it's going to drop. And then whatever we pay, we're going to drop on, it won't be July 4th because that's a holiday and we announce on the 3rd. But when it opens on 7/5, that'll be ex-dividend and it'll be reflected lower in YBIT, right? So we got this dynamic of having an underlying that at times pays a high dividend, which impacts the fund manager writing that one time of the week that it happens, a different kind of strike price for the weekly. It doesn't really impact that much the synthetic because it's further out. All right, so here's the net, guys, I'll get it. So with this share count going down, and this went down, right, by 3 million. This went up because we did sell 73.50 worth of shares at 27 cents, and we had a small 5, 10, 15, 30,000 that came out of here because we had to buy things back for a nickel and 2 cents and 1 cent. So here we are, $6.90. So one can say, okay, well, last month they had $6.66. What did they pay? Well, they paid $1.37. And what yield was that? Because our stock price was up in the 19s. The yield was 81. So I'm saying to myself, they got 690, and on 2 million shares, that's like, you know, take 7 times 2 and say, well, there's $14 million that they've captured. But they also have a liability of 20. And they're going to pay us, but they're not going to go pay $3 or $4. So I'm going with another 81% yield, and I dropped this a little from the other day to $1.16 because this dropped. So what'll happen is as they move to declaration, you guys all know, if they come out and say $1.80 and want to overpay this month, then people are going to go on a $17 stock, they're going to flood in, right? But it won't change for that scenario. So anyway, that's what I got, guys. It's still a heck of a yield. It's just, you know, the situation. People go, oh, well, it's a NAV. You know, I don't want to buy YBIT. The NAV's going to go to 0. Listen, guys, it's impacted by BTC. If BTC drops to 20K, do I think it's going there? No way. But if it did, yeah, this thing's going to go way, way down. And, you know, people always ask, well, they're all going to reverse split. They're just paying back your capital, which is totally not true. But you got to have an underlying that does move up. It can stay flat and slightly down for periods of time, but it can't just never go up, right? So I don't see that as a problem at all. And, you know, I like YBIT. We'll have to see. I think this is the most telling payout along with Misty. They're going to tell us a lot. Misty's in a lot different situation. They got a track record of being the highest. No one's ever paid $3. No one's ever paid $4. And they've paid $4, they've paid $3, and they paid $2.52. So I'm only showing around $1, $1.50 at best. So if they go and pay $2, that says to me they want to keep their reputation up and they trust that it's going to go higher. So that will be fascinating. Okay, guys, I need to let you go. Again, this is not financial advice. I'm not a financial advisor. Have a great weekend. See ya. Bye.